classes that clash. Figure it out.
Well, maybe some of them are on the web.
Yeah.
Well, guys, we're broadcasting, and Cole, you and Clayton said you'd be here today, and you kept your word. All right. Clayton, have you pre-registered yet?
But
You need to. And Cole, have you pre-registered yet?
No, I need to sign up with you here eventually.
Yeah.
are you going to have a form on your door?
No, we'll just play it by ear. Uh, Clayton, for example, I'm here next week. Are you here Wednesday at all?
Uh, 11 in the morning.
Well, I'm here at 12, so how about next Wednesday around 12, 12:30 when you get out of class?
I get out at 11, but yeah, 12's fine.
Well, 12, I'll be here at 12, maybe a little before if you can wait. And Cole, you're not here on Monday, Wednesday, and Friday, are you?
Only on Wednesday when we do taxes. So I can come early
Yep.
that day.
Well, we can do yours after tax class on Tuesday.
I have a class after that.
Oh, you do, don't you? What time's it over with?
3:15.
And if we have to do, we'll do it 3:15 or come a little early on Wednesday.
That works.
So we'll get you two out of the way. And Terry, you and Hilary and Jonathan needs also to pre-register. You know, I do give you 5 points on the tax, of course, exam. Now you're all in good shape for VITA. Next week's the last week, and anyhow, we're pretty much booked up. Booking, okay? We're booked up until 6:30, and there's two, and I told Sarah not to take it more. And I'm not going to take it more. I told her to tell Michelle not to take it more. I told Sarah she could take a couple more if she knew them, and we'd done it before. Cole, I hate that you got the return that you did last night. Number one, that same fellow come here last year, and we figured it up he owed, and I don't believe he liked it. He took it somewhere else. Now, if he took it somewhere else and got his taxes reduced or got a refund, he's turned in extra expenses that he didn't give us. Because I know our program. That program is working good this year. It's not making mistakes. It's not shutting down. There's no glitches. Once they got it done, ready for Virginia and West Virginia, it's good and ready to go. I met with a fellow this morning. He's from Intuit. Do y'all know what Intuit is? Intuit is a software company. They're real big. They produce QuickBooks, which y'all may be taking next year when you do accounting information system. Now they also produce TurboTax. So my interest was, when I was talking to him, would they supply us free TurboTax for my tax class? He said they would. So next year I probably could get TurboTax, and at least in personal taxes, maybe business. Uh, it's another program if you get TurboTax for corporations and partnerships. TurboTax I have at home and on my office computer, it will do business. It won't do corporation or partnerships. It will do real estate and all that. It will do everything you did last night on that return. Now, that fellow had a Schedule E, didn't know his depreciation. Well, depreciation carries over. When y'all look at that real estate table in the back of the book, first year depreciation, depending on what month you started renting a home, and the last year depreciation are only two that are different. 20 some years in between there, it's identical. It's straight line depreciation. So last year we probably took what he took before. And I don't know what they put down last night. He's not happy because he owes. And we can't mention his name. We're supposed to have confidential. He's going to come back next week and I'll talk to him. If he's not happy with him, let him take it down the street. The H&R Block. H&R Block for that return would charge a minimum of 500, probably closer to 600. they charge $350. If you're a student, you got one W-2, $250 to $350. So if you've got a real estate on there and you've got miscellaneous income, which is Schedule C, did he have any expenses with that Schedule C where he paid himself $35,000?
I don't think.
But if you have $35,000 income and you owe Social Security on it and you owe federal taxes on it, he should have jumped when the bill was around $5,000, let alone $2,000. So anyway, we end up with stuff like that. But last night I thought was a good night. That little Murray Ann, we've done her taxes for years. She bought 2 pizzas. That was a plus. But she didn't get them from Pizza Plus. She got them from Little Caesar. Some other little lady brought a bunch of pens and brought all the potato chips and little different boxes of candies. I probably took the preferred box of candy. I took the chocolate covered nutty M&Ms. That would have been the preferred box. Everybody else can have those Skittles and all that other stuff. So some lady last night wants to give Jonathan a tip. I don't know how Jonathan gets tips. I think he flirts with them. But Jonathan asked me, she said, can I give him a tip? I said, no, but if you lay it down, he'll pick it up later. So she laid $20 down on the desk. So I think that's 2 tips old Jonathan's got.
I've got one.
How much you get, Clay?
20.
Good.
It was like the second week, I think.
Yeah. Well, we're not supposed to take them. If they lay them down, we won't leave it laying there. Somebody else will pick it up. That's another plus sometimes. It's an easy A, which all of you should get A's. If Hillary does a few next week, I think she'll be up there too. Right now she's sitting at a CB or something. So nobody's got below a C right now. There comes Jonathan. John, we were wondering how you get these tips. Are you flirting with these little old women? Huh?
I told her no.
Yeah. But that's all right. They lay it down. You don't want to lay it there.
The second week, he was like, now I know y'all can't take these, but I've already talked to Lester. And he said, if I leave it here, you can grab it.
Yeah. Yeah, if you don't pick it up, Clayton or Jonathan, somebody would pick it up in class tomorrow. We don't want that to happen. So, but I thought it was a good night. We've had mostly good nights, except that one lady. I don't want to call her what I feel like, because I'm being taped. But anyway, the one that works at Walmart, and I think Savannah went into Walmart, and the lady started hollering at her. Savannah told that Walmart door greeter that she wasn't coming back because of that lady. And that lady said they'd had a lot of complaints on that one worker. And I wish her well. Hope she don't get fired. I just hope she shapes up her attitude. When you're getting a free service, you don't demand and gripe and complain. If you're not happy, just take it down the street to H&R Block. So, but next week is the last night. I want all of you to try to be there. And I'd like to get a picture too of the whole group next week. So now that brings us up to taxes. And we've had a letdown in taxes. Like cost accounting today, we had a letdown. I did get out of that meeting at 11:30. To retell that, Jonathan, is the fellow from Intuit. He's from Chicago, and they make QuickBooks Pro. And of course, you won't have to buy a book next year for computer information system. They'll give students free access to QuickBooks Pro. And he said I could even use TurboTax and set it up where I could use it in class next fall, personal taxes, and even business taxes, and so on. So I think he's going to be a big plus. Plus, they're going to hire 200 to 500 people. I don't know if it's going to be like an answering service, or you're going to be answering people's questions that use QuickBooks or TurboTax, or just what they're doing. but they're getting a building downtown now. And he's also meeting with Mercer County public schools, and he's meeting with Concord. But they're working with the public schools too, and some of those personal financial classes in high school. And they'll be working with us. And hopefully we can do some training for them too. Let's say, example, if you have to know QuickBooks, they can send their people up here for Mr. Ima will give them a 2-week course in QuickBooks or an 8-week course or what have you. So we hope to pick up students. We hope to help them. We hope some students might get employed, and we just hope it's a win situation. So, but he was interested. So he travels around and gets these centers started for QuickBooks and TurboTax. And they've got another one too called Mint. I don't know what Mint does. I'm not familiar with it. Mr. Ima, I don't think was either. Now, taxes. We've only had one test. We got to have a test no later than next Thursday. Now, this will be an in-class test. Now, it will be on probably 3 chapters. It will be on the last chapter on personal taxes, which was chapter 13, I think, wasn't it? That was at 4797, business property, trade-in, recapture, depreciation. It will be on the first 2 chapters of corporation. That's chapter 2 and chapter 3. Now, I beat those out a little bit here and there. We do need to do a corporate return, and I think I assigned one. I want to start trying to put it on the form. But now, today, we're going to go back to chapter 2, and we're going to look just at a few of the problems. Now, chapter 13, I think it was, you were supposed to give me and Ian the answers to the even problems. Now, if you haven't done that, Terry and Hillary, I think, have. So you 3 guys, I'll still give you a chance. If you do the even problems on chapter 13, let me make sure that is the chapter. Yeah, on section 1231, property, and section 1245, recapture, and so on. Now that chapter will be on the test. Now, you know the test is open book. Chapter 1 on corporation was research. We don't have time for research. We probably barely have time for the classes. Now, chapter 2, I believe Sarah is trying to take the enrolled agent exam. And she printed off copies of their last enrolled agent test. She missed 2 or 3 of the personal, and it had to do, one of them had to do with, credits. I think she left off a credit for one child or something. But they had taxes on there for some circular questions. But that's a circular you have to get if you're going to be an enrolled agent. It's just about being an enrolled agent questions. She missed some of those because she didn't have that circular. Now, once you got to a corporation, it might ask you which one has to file a return. For example, which business has to file a return? A corporation, a partnership, or proprietorship? Now, which one of those have to file a return? Or a sub-S. All right. Now, they're all filing returns. Don't get me wrong. The proprietorship does Schedule C, right? So if I reworded that question, which one of the following has to pay taxes? Corporation, sub-S, proprietorship. Which one has to pay taxes? Corporation only. Proprietorship, you pay it on your 1040 return. A partnership, you pay it on your 1040 return. But a corporation, you do that 1120 that I showed in class Tuesday. Tried to show it in class last Thursday, but I don't think my picture was showing. But Clayton was smarter than I was, on some of these icons on my screen, and he said just hit the picture. I was trying to hit share, and it wouldn't let me. I was going the way I was trained. They didn't give us any alternative ways. And Clayton said just try hitting the picture. That worked perfect. Okay, so I learned something from Clayton. Okay. All right. But now in chapter 2, you will have this on your test next Thursday. In chapter 3, you'll have on your test next Thursday. It'll be a mixture of true, false, multiple choice. It'll be in class, and it will start at 12:30 as usual. But you can stay as long as you want to. But you have a class at what time, Cole? At 2. And Jonathan, you have a class at 2? Clayton? All right. I can't be unfair then to Jonathan and Cole. I'd have to cut everybody off at 2. So they got to run to another class. Now, what class is it, guys? World End. I believe that's the one.
We get out of Austin at 12, start at 30 minutes.
That'd be great. I'll give it to you at 12 o'clock. Yeah, that'd be a good idea, Clayton. It'll be ready, and I don't have to be in here if it's open book. I don't think you're going to cheat. But that's a good idea. Now, Tuesday, let's see. No, that's Tuesday. I'll be here for full-blown taxes. But now Tuesday for calls, come on in. I may have to run out. We're interviewing candidates for entrepreneur job. I'm on that committee. I may have to run out for a half an hour out of cost even on Tuesday. Watch his teaching demo. I wouldn't want to be job searching now the way we put these people through. We put them through a telephone interview already. Then they make it for a campus interview. They got to do a teaching demo. They've got to meet with the committee. Then they've got to meet with the dean, Mr. Imel. Then they got to meet with the provost. And everybody's interviewing them and so forth. Even students, if you want to go to their teaching demo. But I was always just hard to come to work. When I come up here 9 years ago, Dr. Barn was the dean. I wanted to teach one course part-time. He said, we need you full-time. And I was hard without an application, a transcript, or a committee. I just came to work. And he said, I want you to teach principles. I taught that plenty of times. I want you to teach taxes, no problem. He said, I want you to teach computer information system. Well, they had a book. So I tried to stay ahead of the students. But at that time, of course, a lot of that was just principles of accounting, a review. But then, there was some flow charts and there was auditing around the computer. So we got through it. But that same course, then Mr. Imel took it over and he started teaching QuickBooks. And QuickBooks probably makes better sense because it's used real heavily by small, medium-sized business. And QuickBooks does do a good job. It will do payroll. It will do all your journal entries. And if you barely know accounting, debits and credits, you can use QuickBooks. It will print you out an income statement daily if you want it, a balance sheet daily if you want it. It does the automatic posting for you from journal entries. So it's hard to beat. If you got a small business, you need to use QuickBooks Pro. All right. So in chapter 2, other type questions might be advantages of a corporation or partnership or proprietorship. That is the tax advantages. Any kind of course you're going to hear, an advantage of a corporation is unlimited capital. They can sell stock, sell bonds. That's not a tax advantage. Or you may hear a disadvantage of a corporation is double taxation. Still is, even though Trump lowered the rate to 21%. Now, the 21% is in this textbook because Clayton and I looked it up. Okay? All right, so know a few of those, read over those advantages and disadvantages because you don't have time to look up every question. Now, an S corporation we also looked at. Now, I guess the hardest thing in chapter 2 is section 351. So please, before next Thursday, try to do section 351. Now, that's what I hope comes out in some of the problems today. And we'll still review chapter 3 a little bit also on Tuesday. All right, let's go to page 22, 222. Now, Clayton, I think you were here. Did we do 29 in class? You got your book or you got an
I
e-book?
got my ebook, but my computer's restarting.
All right, can you find these problems on your e-book?
Yeah, but my computer had to restart. It's only got like a minute.
Oh, okay.
It had to update. But what?
All right.
I might have wrote it down.
So page 22.
We did 27 and 28. We might have did 29.
And we didn't do 27, but I wanted you all to work on the even ones. But let's all look at 29 again, and I'll go over it quick. So while I'm booting up the solutions, everybody read C2-29 on page 22. Go ahead and read that so you know what we're talking about. All right, now here's problem 29, and I'm sure we went over this, but once again, what is the amount of dicks recognized gain or loss? Now this section 351 is the tax code. Yeah. Yeah. Sorry, it goes on. Somebody took my flipper and I have to go around and turn one manual. Wait a minute, somebody's put my flipper back, I think. No, this is Zoom. I got this thing in here. Let's see. No, don't turn it off. Don't do the volume. This is life size. It's not sharp. They won't turn it off. So somebody has taken my correct flipper. One of these is used for Zoom stuff on the cameras. And why would somebody want that remote? If it's universal, I guess they could use it somewhere, couldn't they? Programming or something. Clayton, you probably could see that one over Johnson's head there. Anyway, Dick does not recognize his $10,000 loss. He's putting it in a corporation. You can't do that and take a loss. Now, does he control the corporation would be the question. Transfer of property and services to a controlled corporation. Control means he owns control. I think it's over 80%. Okay? Now, the second part, what is Dick's basis in his shares of stock? And when does his holding period begin? His basis is what he gave up. Holding period starts 3 years ago when he bought whatever he donated to the company. And then C, what is the amount of Evans recognized gain or loss? Now, Evans None, Evan does not recognize his loss. Just don't recognize losses when you transfer it to a controlled corporation. Now his base is 45,000. His holding period started 4 years ago when he bought whatever he put in. Now, Fran, what did Fran give? Services? Did Fran give services?
Yeah.
Right, it's like that C, it's like that 1099 miscellaneous that Cole had last night. This taxpayer had 35 or 36,000 of miscellaneous income. All right, and that was for services. Whatever company he owned, he paid himself, whatever the deal was. All right. First off, Cole, we're not supposed to do taxes for people that make over $60,000 a year if we don't want to. Yeah, we're not supposed to. This fellow had 110,000.
So if we see above the
Huh?
60, if we see above 60,000, we can just be
We
like,
don't have to do it, but
We
we
can
usually
do
do.
this.
But we only got one more night. We'll just flow with whoever we
Yeah,
got.
do this, let me do this when he had 106 now.
We did one 106.
that girl that gave me the 20 had like 30,000.
Well, you know, most of them are these little old people. They got Social Security. They got a little bit of annuity or a little bit of retirement.
Well, she was wondering why she couldn't claim her son. Well, he was 24. He graduated last May. So, would you never claim it?
Did he graduate May 18?
Yeah.
Yeah, 5.
But he made like 18,000.
Well, she probably couldn't prove she afforded over half the support. If it only made like 7 or 8,000, I'd say, yeah, I'll claim it. 5 months out of the year makes you a full-time student. That's why they do one semester. January through May, 5 months. September, October, November, December. This should have to start in August. They even count the fall semester as 5 months. Okay. Would it help too much? So you don't get an exemption, but somewhere if you can claim a dependent, it helps you, even if it's additional tax credit or something. Somewhere it does help, not like it used to. Used to, if you got a $8,000 exemption for a child, go up to 8 or just go up to 6 something. We'll go 6 something. You know, if you were in 25% tax bracket, 25% of 6,000 saved you $1,500 in taxes. It don't work that good now. All right. Of course, the Democrats want an easy tax form. How much did you make? Set it in. I think they want everything you make. Now, I think they want to tax the wealthy at 70%. Pretty good tax bracket to pay 70%, isn't it? All right. Anyhow, Fran does pay taxes on her services because this is considered wage. Now, she will have 20,000 bases in her share of stock, and her holding period starts the day she got the stock. Now, Fran will take a 50,000 base in land and a 30,000 base in machinery. Because of the lost property limitation rules, the base for these assets are reduced to their respective fair market value, assuming the parties do not elect to reduce stock base. Both assets have a holding period that begins the day after the transfer. The services, if capitalized, would have a $20,000 basis and a holding period started the current year. Now, services would be like organizational costs or startup expenses that you could amortize. We know when somebody works for us, we don't amortize their wages or their salary. But for services and startup, you can. All right, so that brings us up to, we want to go ahead and do number 30. I want to give you all 5 minutes to read number 30. If you can answer a few of those ABCs, please do it. So take a couple of minutes, read number 30, it's similar. All right, let's look at that one briefly. Um, Transfer of property and service to a controlled corporation. In the current year, Ed, Fran, and George form Jet Corporation. Ed contributes land, having a 35,000 fair market value purchased as an investment 4 years ago for 15,000 in exchange for 35 shares of stock. Fran donates machinery. That's 1231 property. All right, and that was used in her business. Okay, the machinery had a $45,000 adjusted basis, but only had a 35,000 fair market value. All right, George contributed service for 30,000. I don't know what made me think of this, but have any of y'all watched or seen Game of Thorns on TV? Have you heard about it? All right, I heard so little about it, I pronounced it in a meeting down there. Game of Thrones. But anyway, I've got this guy. Many of y'all know Jacob West. You know Jacob? Let's go, Jacob. Well, my international students was back there live. And they showed me a picture of the actor on Game of Thrones. And I swear, he was identical to Jason. You all know what Jason looks like, right?
Yeah.
Bring up the actor on Game of Thrones. Look at your cell phone, see if you can find it. I don't know if he's the main actor or support actor or what. Put it on your save. I just thought that was cool. Found it yet? Boy, love. Let's see. Yeah. I believe that's it. Let's see. Another way you look at it, you think it looks like Jacob?
Yeah.
But then on Jacob sitting in class this morning, the picture they brought up was a different, and they looked right in him. He looks a little different there. And that one. That one looks just like old Jason sitting in class.
I don't know who did it. I just know that it looks like that.
Oh, well, I think Jacob's got a kick out of that. Anyway, that had nothing to do with taxes, and Jacob Weber's not getting any of that salary, so shucks. Okay, what is the amount of Ed's recognized gain or loss? Now you're gonna see 30, just about like 29. All right. You'll see a B part to this thing. Let's see. Okay, I'm on number 30, right? Number 30 had the B part. All right. What is Ed's basis in Jet's shares? And you can see that 35,000. Ed's holding period began on the day after the exchange. All right. Now, what makes, okay, guys, when you read there, just answer one question. What made A here different from A here? Did you read the paragraph? What was different? You read that paragraph. I didn't even see an A or B plate, did you? Immediately before the exchange, the machinery had a basis. On number 30, did you all see an A and B, or am I missing something?
There's A, B, C, D.
Well, I do see, I know I see A, B, C, D, F, G,
But there's not a second set.
But what that's asking is,
but I'm looking at H here.
yeah,
What?
that's saying,
Oh,
how would
H.
your answers change for A?
Okay, that's where my B comes in. Okay, well, I didn't see that. Now, how would your answer C? Because the section 31 requirement will now have been met, the answer changed. All right, no gain or loss if it's controlled. 20,000 gain if it's not controlled. All right, 35,000 bases. Here you go back to 15,000 bases. Fran recognizes a loss. If it's controlled, no loss. Now that's the difference. Yeah, I just couldn't see where they were in the B part because I hadn't read H yet. That's why. Yeah. All right. And D, the $45,000 basis, where before it was 35. George recognizes 25. Now you see, look at E and both of them. They're identical answers, aren't they? Service is the same whether it's a controlled corporation or not a controlled corporation. Services are the same. All right, $30,000 basis. F, still the same here. Value of services. G, Jet Corporation takes a $35,000 basis, but here it takes 15 and 35. 35 and 35, 15 and 35. So when you read that chapter, just look over what is a controlled corporation, what is not. All right, now we're going to look at 31 together here. Look at 31. Read the question. Olive transfers property to Quick Corporation for 75% of stock, and Murray provides service to Quick for the remaining 25. Now, does that meet control requirement? The control requirement is not met. Transfer of property received only 75, but they have to have how much? All right. So remember that 80%. That's when you can transfer a property and not take a gain or a loss. Okay, but how about B part? All right, P transfers property to Target for 60% of Target stock, and Robert transfers property worth $15,000 and performs service worth $25,000 for the remainder 40%. Now Pete and Robert own Target. So what does B say? It's met because that's over 80%. That's 100, isn't it? All right, C, Herb and his wife, Wilma, each have owned 50 shares of the 100 outstanding shares. Now, Herb and his wife. On number C, the control requirement is not met. Why? Wait a minute. Am I looking at the right one? C, Herb and his wife. Their son transferred property for 50 newly issued shares of the stock. All right. So now Herb owns 50 and the wife owns 50 and the son owns 50. That makes 150 shares. Herb and his wife only own 2/3, which is 67% rounded off. It's not 80, is it? All right. Okay. E, George recognized, oh boy, let me get on the right one. D, Charles and Ruth develop a plan to form tiny corporation. On June the 3rd of this year, Charles transfers property worth 50 for 50 shares. On August the 1st, Ruth transferred 50,000 cash for 50 shares. If you look at the answer up here, the control requirements are met. They own over 80%. And then the last one assumed the same facts as in Part D, except that Charles has a prearranged plan to sell 50 of his shares to Sam on October the 1st. All right, look down at that last answer. The control requirement is not met. Charles had a prearranged plan to sell a sufficient amount of shares to fail the control test. Only if Sam was considered to be transfer R. Anyway, it didn't work, so you can read E part there. Okay, moving on and looking a little bit more. We know what control is now. And we know it has to do with gains or losses. So we're going to flip control over to number 35 on page 40. All right. Now, I've done many of these. I've turned many sole proprietors into corporations. I'd only charge them a couple of hundred to incorporate them, whereas a lawyer would charge them $1,500, $2,000 for an hour or two work. CPA would charge a minimum of $1,000. But anybody can incorporate anybody if you're in the accounting world. Okay. Home incorporates sole proprietorship as a total corporation transfers its assets to total in exchange for all 100 shares of the stock and 10,000 interest-bearing notes. Stock has 125,000 fair market value. All right, the notes mature consecutively. Okay, the assets transferred are as follows. Okay, cash, adjusted basis, fair market value, equipment, minus accumulated buildings, minus accumulated land. Now, what is the amount and character of his recognized gain or loss? Now, he's starting a corporation. Okay, now this is number 35. Now, if you just looked up right at the adjusted basis, 140,000, and the fair market value is 165, or the stock has a value of how much? Stock has a fair market value of what? 100 what?
25.
Now you're gonna get four $10,000 notes. So what is 40 plus 125? That's how you're getting the fair market value of your assets. Now, is it going to be taxed? That's the question. All right, now here's a part. It's a little more complicated than it looks. All right. It looks like you had 240 from 140 from 165 is $25,000 gain. You can do that for tax if you want to. The IRS would be tickled with that. But if you do it correct, they wouldn't be tickled with it because they had this recap. You've got loot of what, $40,000? You got to take the fair market value of the assets, 5, 90, 40, 30 is 165. Now, go take your calculator and divide 30,000 by 165. Divide 30 by 165. You get point what? I want you to get 0.18.
Yeah.
Okay, that's what I want you to get. I just want you to see that you're taking the total, which is 100%. One is 100%. You divide it into each of the individuals. Now, fair market value of stock received. All right. Okay. All right. Go take 125,000 times decimal 181818.
2,727.
All right. That's where you get these amounts. Fair market value of stock received. 125,000 times each of these percent. Now, what's this 40,000? That's the boot, right? So you multiply it by decimal 181818 and so on. All right, minus the adjusted basis of the asset. All right, that leaves gain realized at 30, a loss of 11, a gain of 6, makes 25. Now, allocation of boot. Okay. Now, we know where the 21,818 come from. Now, we know where 9679 came from. But where'd that zero come from? Know where the 6 came from. Know where the 7.
Because the 11s in a negative.
It would be a negative number, wouldn't it? Be a negative number. So 9697, pretend that's 0. And anyhow, but here is your taxes. You could have went way up here. Boot property 21,818 and boot property 6,000 gives you 27,818. I don't think it had done all this to got that. Just boot property. Okay, looking at the rest of these real quick. Adjusted basis of property transferred, boot received, gain recognized. So your basis in your stock is 127. That's 140 minus 40 plus what you're going to pay taxes on. Your notes are worth 40,000. Now, the $165,000 total basis of property received, Tom's basis, 140,000, recognized gain, we already calculated that, reduction, 218, we did that somewhere. That's your total. But what I would do if I was putting in a proprietorship into a corporation, I'd probably put everything in because who can prove fair market value? Who can prove it? Now, if it's inventory, you go out there and see the current price and prove it. I would put it in at my basis. And I wouldn't worry about, now the book received, you have to pay taxes on. That's why we did this calculation. So if you start a corporation, put everything into that corporation at its adjusted basis, take no book and start a new set of books. That's what I would do. And it would be legal enough that you wouldn't get put in jail. Okay, a couple more of these guys. I wanted to look at number 43. Barbara transfers to Moore Corporation 10,000 cash and machinery with 15,000 bases and 35 fair market value. So here you go again. I got 15 in it. It's worth 35. All right. For 50 shares or more stock, the machinery originally cost 50,000 and subject to 28,000 liability, which Moore assumed. All right, Sam exchanges 17,000 cash for the remaining 50 shares. For the amount and character of Barbara's recognized gain or loss. Now you got to pace back, look at her number 43. I mean, Barbara has the hardest situation here, but if you trace through that problem, fair market value of stock received, all right, you're going to be released of that $28,000 liability. That's same as giving you cash, so that's $45,000 minus based on property transfer, machinery 15, money 10. So she has a realized gain of 20. Realized does not mean you're paying taxes on it. So go back. The liability is assumed minus the basis in the property, and you got a recognized gain of 3. That is really the same as cash, 28 minus basis of the property, 28 minus 25 is 3. Still a shorter way. All right, look at the rest of these answers. Hopefully they're not as complicated. B, 0 basis. Property transferred, 25. You paid boot, 28. Gain recognized, 3. Basis in the stock is 0. If you turn around and sell stock tomorrow, you'll pay taxes on all of it because it's all gain. And C part, $18,000 basis. Barbara's machine was 15. She recognized a gain of 3. Well, now she's got 18 in her stock. Sam has no gain or loss. 17,000 basis, the amount of money he contributed more stock. Barbara's holding period includes her holding period for the machine. All right. Now, you might want to go back and look at these alternative answers. So, we've looked at a controlled corporation, a little bit about assuming liability. All right, now, the next chapter, we're going to look at chapter 3. We were looking at calculating their taxes, and we looked at 1120. Now, Clayton, what problem did I assign the other day at the end of the chapter 3? I wanted you to put on 1120. Do you remember? It might have been a comprehensive problem. All right, or it might have been the tax forms return preparation problem. But man, that is a big problem. Number 65, and that's 4 pages. Number 66, 2.5 pages. Well, let me start you off with the easy one. How's that? Look at page 58 and I'll start you off with number 63. Now, what I want you to try to do is take 1120. You got your sales, cost of goods sold. Now remember, 1120 is just an income statement. Okay, you've got some expenses. Okay, information on equipment depreciation, or you acquired some depreciation on March 2016 for 180. You got to depreciate that. But now for your books, you did it 12-year life straight line. But for taxes, you do it by MACRS. Now, what did we sell down here? We sold something for 80. It cost 180. We had depreciation of 30. Book value at the time of sale was 150. Remember, we sold it for 80. Book loss was $70,000. But will we have that much of a loss if we do the other taxes? And there was no 179 deduction. Equipment 2 acquired February for 624. You calculate the right depreciation. And what I want you to try to do is put as much of this on the 1120 as you can. That's requirement A. And that's requirement B. And that's requirement C. Okay? So try to do this one on 1120, bring it to class Monday or Tuesday, and what you can't do on that one, we'll finish it off in class and get everything in the right place, okay? All right, start the even problems on this chapter also for Tuesday, and do that one problem. All right, now this chapter had to do with choosing a calendar year and a fiscal year. It had to do with the tax rate of 21%. It had to do with your cost of goods sold. It had to do with your dividend received deduction. It has to do with your, Clayton, do you remember how much you can take for a charitable donation? All right, do you remember, Jonathan, how much we could take for a charity under an individual tax return if we were itemizing? How much of your money could you give to charity and it be deducted?
What's it like?
It's a percent now, Clayton. Jonathan, you made how much last year? 8,000?
Yeah.
All right, you can give 50% of that to charity for an individual
Always good.
for cash donations. But now, when you went into depreciable property or land or whatever, it could be a fair market value or the cost of whatever. And there's some 30% limits in there, Clayton.
You donate. Try to prove it.
Okay, good question, Jonathan. Most churches I've been to, if you remember, they give you a little donation envelope. You give them a check or cash. If it's in that donation envelope with your name on it, they keep a record. So my church may send me a record at the end of the year that I gave them $1,500 donation. That's a record. IRS would rather have that record than my canceled checks. Because I may have wrote out to church $500 to go on some kind of trip. My girlfriend's going on some kind of trip, I guess, down to Gatlinburg with a bunch of women from church, and she'll probably have to write out checks to the church for $200. Well, that's not a donation, that's a trip. The IRS would rather have the documents the church gives. Now, if you take clothes to a food pantry or Salvation Army, they will write you up the fair market value of those clothes. And yeah, that's a receipt for your record. If you sell land or give away land, you definitely want that appraised fair market value, and you know your cost at the time you donated. And you should have somebody's signature from the church if you gave that land to the church. But to answer your question, Jonathan, yes, try to have documentation. Now, if I get a taxpayer, he says, oh, I gave $5 every week to the church. $5? I take up a collection at our church, and there's 2 or 3 men when I work the collection plate. They'll take $1 bill if I have it. Anyway, they will squeeze that $1 bill so tight. I've got 2 or 3. They'll take a $1 bill and they'll roll it up like that and drop it in a collection plate. I don't know if they don't want anybody to see it now or what. Then I'll have one that will take a $1 bill and just wad it totally up like that and drop it in a collection plate. Again, they don't want people to know what they're giving, okay? I mean, don't be, hey, God knows what they're giving. Don't he? And knows what I give. Anyhow. Okay, let me show you that real quick on a corporation. A charitable donation for a corporation is 10% of AGI before this 10% deduction. All right. Now, what if you had sales of $1 million, cost of goods sold and expenses $900,000, that led to $100,000 taxable income, right? Now, if I gave $40,000 donation, and I deduct out as expense, I'd get my taxable income down to 60, wouldn't I? 40 from 100. But they let me take 10% of this 100. If I donated 40, I can only take 10% of AGI, and that is my charity donation. Now the other 30,000 I can carry over to next year. So you're limited in a corporation to 10% of your AGI before the charity donation. Okay. Well, with that, we'll call it a day, folks. So
if it's just a personal, it's just 50%.
Yeah. I mean, if you make 50,000 a year and you want to give the church 25, you can itemize deductions. Okay. You know, this new tax law, though, I hope it don't hurt churches where people quit giving. Before, you had to have over 12,000 itemized deductions, but this year, married, filing joint, you have to have over 24. And if these people are over 65, you get $1,300 more per person, standard deduction. So I got a standard deduction this year of $13,300. Okay, see you all on Tuesday, folks.
We need to turn this in.
Yeah, if you have, yeah.